Two things are causing people to pull money out of large commercial banks. So the banking problems you had earlier in the year, I think, may have scared people a little bit as to the solvency of the banking system. But I think this deposit gap is forcing people to pull their cash and liquid deposits out of the commercial banking system, seeking higher interest rates elsewhere. And also, a third reason, the general economy is a little bit tougher on the lower middle classes so that they have less discretionary capital, so they may be pulling some deposits out for that reason.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. And what is going on in the world? Our good friend, Rob Kientz, is with us now. And of course, you find him at goldsilverpros.com. Rob, it's always great to have you on the show. So we're talking pre-call, banking crisis. What is going on in the banks? How serious do you think it is? And is it time to really start hoarding Bitcoin and precious metals?
Well, always a pleasure to be on your show, Kerry. You do such great content and appreciate that very much. I know being a content creator, it takes a tremendous amount of work. So I definitely appreciate everything that you guys do over there. The banking crisis, I was looking, post the problems we had in the spring. I've been doing some investigations into banking and just looking at the health of it. And, the liquidity ratios are being stressed, meaning the amount of free capital the banks have in order to stay liquid during times of distress is going down. A lot of what's happening is this, what we call the deposit gap. So if you think about interest rates for a moment, we all know that the Federal Reserve has been raising interest rates here for quite a while, and it's caused a little bit of financing troubles in the economy, people paying higher interest rates for real estate and things like that. And as those interest rates rise, products that consumers may buy, like automobiles or homes or things like that, come with higher interest rates. Naturally, they filter through the system when it starts at the Fed. The problem is the banking system is not providing their depositors, the commercial banking system is not providing their depositors with similar increases. So you have this deposit gap. And I believe two things are causing people to pull money out of large commercial banks. So the banking problems you had earlier in the year, I think, may have scared people a little bit as to the solvency of the banking system. But I think this deposit gap is forcing people to pull their cash and liquid deposits out of the commercial banking system, seeking higher interest rates elsewhere. And also, a third reason, the general economy is a little bit tougher on the lower middle classes so that they have less discretionary capital, so they may be pulling some deposits out for that reason. But in any case, what this led to since April of last year, a little over a year now, we've had an outflow of almost $1 trillion from the large commercial banks, and an additional, several hundred billion from the small commercial banks. So we're sitting at about a trillion or so dollars being pulled out of the commercial banking sector in terms of customer deposits. And so now the banks don't have those customer deposits. Well, what do banks use customer deposits for? They take the money in and then they refinance or re-lend it out for higher rate investments that are often longer term. So a lot of people talk about this. You have the promise to pay on customer deposits is shorter term, but when you lend money out as a bank, you have a longer term commitment to get that money back. And so you have this deposit gap between the interest rates of what the banks are taking in and giving out, and people are noticing it and say, hey, wait a minute. If you're not going to give us a higher interest rate of my money, I'm going to go put it over here. And that's reducing liquidity ratios at the banks. And when you look at, loan to value ratios, you look at Silvergate Bank and SVB, they were in the 90%. Well, there are a couple other banks in that range. But if you look at the overall large commercial banking sector, we're at 78.8% as of like a month ago. It's probably close to about 80%. And that's kind of a danger zone. At this point, the large commercial banks are sort of in a little bit of distress. And the second point that I'd like to make is that the amount of uninsured deposits, either those above $250,000 or those that may not qualify for like FDIC insurance, has gone up, and it's slightly over 50%. So there are two problems if you're a depositor in a bank. One, you're not getting the interest rate. Two, the risk of the bank operations is going up. And three, you're having issues with your deposit may not be insured. And what this has caused the commercial banks to do is go out to the wholesale funding market and increase their wholesale funding. Well, so they can get cash to fund operations through wholesale funding, but there's often an interest rate attached to that. So now they have another liability, which they couldn't pay for in the first place. That's why they had to go get wholesale funding. So it leads to this banking spiral. And I suspect that that's going to come to fruition sooner rather than later. And I don't know whether we're going to have wholesale defaults in the banking system, but it sure looks like the banking sector is not super healthy, and actually is probably a little bit less healthy even than it was in the spring when we had all of those bank failures. First Republic, Silvergate, SVP, and I think also Credit Suisse across the pond had some issues.
Yeah.
So the U.S. banking system is in a bit of trouble, and be interesting to see if policymakers formally recognize that, and maybe is there anything that they can do to help the banks shore up their balance sheets a little bit more.
Well, I think that last take under Bank of California showed that they've gotten their act together. And basically what it tells me is that all deposits are implicitly guaranteed by the U.S. government, and that they're not going to make the same mistake that they made with SVB, where, like every banking crisis, the initial response is, we're not going to bail out the banks. We're not going to do it. We're not going to do it. And then they see a loss of confidence. And then they said, well, of course, we're going to bail out the depositors. And that's where we wind up. But they have to learn the lessons from the last failure. They had bailed out Bear Stearns and Lehman. We wouldn't even be talking about what happened last time, but the fact that they didn't, and they shut them down, they drew that line in the sand, really led to a massive loss of confidence in the system, and the rest is history. So they never learned this because, look, you got fractional reserve banking, and you've got banks borrowing short and lending long. It's what they always do, and they always get banged up when rates reverse, when the yield curve reverses. And this time is no different than the other, except that I think the government caught on faster. Maybe there are bailouts. Let me get your opinion. Do you think there's bailouts taking place behind the scenes we don't even know about? We know that the special discount window, emergency funding, has been lending at record levels.
Well, it's funny when you get into high finance or the banking system, it gets super complicated. Like, I know that the Fed had increased the amount of high quality liquid assets that they were putting into like the repo market, which is a way for people to borrow, intraday to fund operations. But you can only do so much of that. And I do think that the signal from the FDIC and the Fed for the banking failures in the spring was that they did want to back depositors, but the investors, the bondholders and the shareholders got the shaft, to be honest with you. So that's the way they did it. They said, well, we got to pick our poison here. And I do, believe what you said, they're going to try to back depositors. The problem with like the FDIC, they only carry about 1% coverage when you compare it to all the deposits in the commercial bank. So they can't bail out 100%. Even if they wanted to, unless the Fed steps in and just either prints money or does something else. Or I suspect what will happen is when we have more bank failures, you're going to have the big guys probably come in, like the JP Morgans and those guys probably offer, much like they did during the Lehman issue, to take over some of those distressed assets. The question is, how contagious is this, and will the policymaking tools be strong enough? And honestly, I don't know. I have some concerns about that. How much, if it turns into a contagion, I think the stresses could be pretty strong, and the policymakers could be put in a really difficult position, telling the public what they're able to do and what they're not. Hopefully this doesn't lead to a downward spiral, and that's enough to help consumer confidence. But honestly, I don't know the answer to that question.
Hey, so getting back, this is a tale of two cities here, our economy. The low tax states, we don't even need to get into politics. All we have to do is just look at the economic markers, indicators, issues, right? Places like Florida, Texas, a low regulation, business-friendly climate, developer-friendly climate, and low taxes, no state income tax, personal, minimal business income taxes. They're booming, and the real estate in these markets is booming. And you could make an argument that the freedom index is certainly higher in these states as well. And there's a number of states. There's Tennessee. There's a lot of states that are thriving right now. And then you got the other mush, high tax states with very misguided policies, benefits going out the wazoo, all of that. It amazes me because the first thing that you look at when they raise rates is real estate prices go down almost invariably. And we've had a rapid increase in rates from 3% or less mortgages to 7%. And yet people pursuing lower taxes. So maybe you're going to pay $10,000 more per year in higher interest rates. But on the other hand, that's going to be deductible for the most part. And you're going to be giving up the virtues of paying a state income tax to places like California and New York. So you still come out ahead on the deal, Rob, right?
Yeah, I think you do. And there's been this massive migration over to those types of states. Of course, I live in one that's generally considered business friendly, lower tax in the state of Texas. I live in the North Texas area, Dallas-Fort Worth, which is the fastest growing metropolitan area in the United States. And I can tell you that there are positive signs of growth, also stressful signs, but positive around construction build of highways. Real estate is booming. I used to be a real estate investor from 2000 to 2018 here in North Texas, and I could buy a 3-2 single family home, moderate quality built, 70s, 80s, pretty typical for this area, for anywhere from 90 to 150,000, depending upon certain local factors. Now that real estate goes from 350 to 500, and we're talking modest stuff. We're not talking new build. Yeah. We're not talking the Taj Mahal. And for Texas, that's a lot. It may not seem like a lot to somebody who lives in New York or California, but when real estate triples in the matter of 5 to 6 years, the average home, how do these young kids get into a starter home? They can't afford it because now those homes are as expensive as what their parents bought their luxury houses at. And so it's without the wages going up correspondingly, and wage rates haven't risen quite as much. So we're still in a better position than many of those other states, but it does, provide some stress. The good news is if you do own real estate, you're doing very well. I almost wish I hadn't sold the last of my properties in 2018, just held them for a couple more years. Maybe I could have retired just off that alone. The boom has been, unimaginable. But the flip side of that token is rents have also risen. So for those at lower incomes, it's a little bit more stressful. So depending upon what part of the income strata you're at, it could be a positive or a negative. But in general, these states are doing much better. There are more tax receipts. The school systems are flush with money. The average teacher here in North Texas now is making, $65,000 to $70,000, and those salaries have risen. So there are benefits to that. I mean, it has definitely helped. But we were also talking about social services. I'm going through a permitting process right now for a project, and it's taking a very long time because there's so much growth and so much demand. So I think there are positive and negatives to it, but yes, we definitely see those populations moving to those areas, and it's been generally pretty positive for people there. And I don't think that's going to stop. I suspect if Dallas-Fort Worth continues to grow like it is, you're going to see almost one long continuous city from the border of Texas, Oklahoma down to Central Texas here within the next 15 to 20 years. I mean, that entire north central Texas area is becoming a single giant metropolitan area, honestly.
Yeah. Well, I've been to your fair state many a time and had family in Dallas. I know they call it the Metroplex.
Yes.
You go to downtown Miami here, Rob. I mean, it looks like Beijing with what Beijing looked like 10 years ago. Now all the cranes are falling down in Beijing, but it's how, high rises going up left and right. I mean, they're to the point now where the land has become scarce. So they're like ripping stuff down. And on occasion, you have a high rise will fall down on its own. And then that gets recycled too. So
yeah, that happens. And office space in Dallas Fort Worth has been absolutely, exploding everywhere I look. Especially, Amazon has a big distribution center here, probably about 3 or 4 miles from where I live, and the amount of warehouse space, because I live near DFW Airport, and the amount of just warehousing space has exploded around there. If you're building warehouse space in North Texas, you're going to do very, very well, because a lot of companies are using Dallas Fort Worth as a distribution point. Of course, the airport is connected to, you've got direct flights to most places in the world from DFW. So it's a great spot, if you're a business owner, or if you want jobs in and around that industry. It's a great place to be, honestly, right now.
What's amazing is the growth of Florida has actually led to a resurgence of passenger rail, because we have, just like you do, horrid traffic. And now they built this thing called the Bright Line, a quote unquote public-private partnership, but they put in new rail, and it's going to go all the way from Miami to Orlando and to the airport there, and get you there within a couple of hours. And it's pretty amazing what's taking place, because the traffic gets so bad that passenger rail, expensive passenger rail, it's gorgeous. I mean, it's clean. You can eat off the floors of the trains and the stations. Robert, it's amazing that we could actually do it. It's not particularly safe because it's traveling on cargo rail tracks, and we have hundreds and hundreds of grade crossings with gates, and people get killed. But people get killed on the highway all day long too, in Florida and in Texas. So it's interesting that this growth can actually lead back to the past. Kind of the glory days of rail travel are coming back again.
Yeah, and the same thing's happening in North Texas. We have Dallas Area Rapid Transit, I believe, is the overall organization, and they've connected the airport, the two downtowns, Fort Worth and Dallas, and a lot of the mid cities together. And where I used to live, a little bit different part of the Metroplex, there are passenger trains that come by almost 100 a day now. It's like 4 or 5 an hour, just zooming by, and they're using, the commercial rail system to do that. And these are modern, beautiful passenger rail systems. And the challenge with North Texas is it's so sprawling that it's harder to run buses and that type. But with rail, you can tend to move a lot of people. There's also one other thing called the Trinity Railway Express. Trinity is a Trinity River here in North Texas that connects Dallas and Fort Worth on a double-decker passenger train that looks like a freight train. I mean, it's huge, and the amount of people that they're able to move is quite substantial. So we have seen that as well, increased rail. And I will say this, in North Texas, the traffic has gotten very heavy. So much, like now 635, which is a main artery connecting North Dallas, it's basically like a loop, is now double decker, much like you used to see in LA, for example. So all of our highway systems now, are being upgraded as well. So a tremendous amount of infrastructure development here in North Texas.
Yeah, same here. Highways in Florida are constantly being widened, under construction. It's really amazing. Never seen anything like it. And I've been coming to Florida my entire adult life. So, it's really kind of amazing to see.
Mm-hmm.
All right. So where do you put your money? How do you defend yourself against what's happening now?
Well, I think with high inflation, it's brought people into looking at quote unquote alternative investments. And I'll define that as anything other than your typical stock bond, 60-40 type of portfolio. Of course, Bitcoin did very well. It was at 60,000, I guess, before, crypto winter. It hasn't quite recovered, but there is more support into the crypto space. Gold, silver, of course, the one thing I kind of called, that's my niche or my specialty is gold and silver. Sure. I did used to have other financial licenses, but I left that behind many, many years ago.
Good move.
But the gold silver markets, I kind of called it at the beginning of the summer. I wrote an article for Jay and Boy, in which I do regular content there. And I said, I don't think this summer we're going to get the usual fade in gold and silver prices we typically do. Of course, in the summertime, It's kind of the mantra of sell in May and go away until school starts again, late August to September. People tend to go to the beaches or vacation and be a little bit more conservative for their investments and park money certain places. So a lot of the financial markets are not quite as frothy unless there's something big going on in the economy. And typically gold and silver will fade a little bit. And we have not had that fade. If anything, gold and silver have held serve over the weakest, traditionally the weakest part of the year. And not only that, we've seen a massive, silver specifically, we've seen a massive amount of silver come out of the UK market, the industrial side. Right. And it appears a lot of that's made its way to the US. So there's a lot of pull in the US now on the precious metals, not only the paper derivative complex, which is what determines spot pricing, but also the physical metals themselves. And so there's been a little bit of a resurgence in precious metals investment here in the US. And so I think specifically the younger generations, there was an article on Yahoo Finance that came out, put out by State Street, and there was a study done by SPDR that does GLD and SLV, which are gold and silver ETF investments, and a lot of other ETFs. And they did a survey of their users, and millennials are putting more money into gold and silver than my generation, Gen X, or the boomers. They're now at 17% of allocation of their money is going into like GLD or SLV. And, people are shocked when I say that. They're like, don't they invest in Bitcoin stuff? Yes, they are. But because of crypto winter, I think some of that money went back to gold. So that's a reversal. From the last financial crisis to about the pandemic, I would say the younger generations were more into Bitcoin. And I'm in investment clubs, and they always talked about Bitcoin. They also talked about digital investments, even stuff like, Wall Street bets and those types of things. Yeah. But now that generation starting to move over to gold, and that's a very positive sign that they're looking at some of those more traditional alternative investments that, the older generations are more comfortable with, although more in a paper format. I think what's going to happen when we get to the next recession finally, because this is what happened to my generation during 2008, we went from buying things like GLD and SLV to buying physical gold and silver. And I think what's going to happen to millennials during the next recession, they're going to trade out some of their paper gold and silver investments and go buy the physical if the pattern holds. And I think that's coming. So I think from the physical side of the gold and silver market, they're about to get a lot of support from these younger generations saying, we're looking at the banking system, we're looking at inflation, we're looking at job availability, and we want to do something to protect, our long-term financial futures.
All right, Rob, I think that kind of sums it up. Everything old is eventually new again. The younger generations always rediscover what the older generations knew and often forgot or neglected. I think we're going to see that here. Hey, Rob, tell us best place to find you and best way to connect with you on the web.
Yeah, easiest place, just go to goldsilverpros.com. We're a social media business, so that's a landing spot for all our social media. You can find us on YouTube, Twitter, Reddit, and other places like that. But if you just go to our website, goldsilverpros.com, it's an easy way to reach us.
Excellent. The link is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, please sign up for your free newsletter. And of course, send me an email. Got a question for Rob or myself? We'll get you an answer. KL@kerrylutz.com. Rob, always a pleasure. Thanks for stopping by.
Thank you, Kerry. Appreciate it very much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.